Can you describe the difference between the banks and EDC? Specifically, how they can support Canadian companies doing business abroad?
Certainly. I would say that one of the most important things to really keep in mind is that EDC doesn't compete with financial institutions such as banks. We actually have a partnership model with them where we deploy our own programs through financial institutions. And so, having worked at a financial institution for just over 10 years now, and now being with EDC for almost 7 years, I have a fairly good perspective on the principal drivers of decisions within these institutions. And I would characterize EDC as a very mandate driven institution. And its mandate is to really help Canadian companies grow their sales and operations outside of Canada. Whereas financial institutions like banks predominantly are driven by balancing risk and shareholder returns, which in itself is a very good thing because we need to have a very strong domestic banking industry. And it's really one of the best ways to actually manage risk. But let's say that you're a Canadian company and you're selling bicycles and you're really looking to expand your sales into Europe, and you've decided to expand those sales by way of acquisition and acquiring a potential competitor in, say, Germany. When you approach your financial institution and make a request to access that capital, the chances are is that they're going to have a difficult time in providing you financing for that request, unless of course you have a lot of assets in Canada that themselves are not encumbered. So something like a piece of real estate where the bank can lend against that piece of real estate, and you can use that capital to acquire the German competitor. EDC, on the other hand, really views this acquisition as right in our crosshairs of our mandate. And so we would look to support your financial institution through one of our programs to help them deploy the capital without necessarily encumbering any of your Canadian assets in the event that you didn't have any. And so I would say that the largest challenge that we're currently faced with is that many of our programs are still relatively unknown to both Canadian companies and bankers themselves.
So, how exactly does that happen? How does EDC help banks so banks can help Canada businesses grow globally?
Yes, ultimately, to succeed internationally, Canadian companies really need to have access to capital. They need to have access to risk management solutions. They need to have access to certain financial tools or instrument to be in a position to better negotiate contracts. And banks are really fantastic at creating loans or creating these financial tools to scale company sales, but they may not be in a position to deploy those solutions when the perceived risk of the specific loan request is too great. And that's where EDC really steps in to help de risk the banks so that they're in a better position to provide both capital and these financial tools to help these Canadian companies scale their sales and operations beyond Canada's border. And so, if you're a Canadian company and you need access to a letter of credit to negotiate a better contract for yourself, you're going to approach a financial institution and they're going to ask for cash collateral, or they're going to carve out a portion of your line of credit. And so we don't necessarily feel that using working capital as a means to access these financial instruments is the best way to deploy that capital. And so we would step in with one of our programs so that you would be able to access this financial instrument without necessarily tying up your working capital. Or perhaps let's say that you're a company that's just negotiated a contract with a new customer in Japan, and you need an additional $1 million line of credit to fulfill this order and future orders to this client. And you approach your bank and you request the line of credit. And in the event that your bank can actually provide you with the $1 million line of credit, that's great. We're not needed. But in case you find yourself in a situation where the bank is not able to provide you with this line of credit, we could potentially step in and provide your bank a 75 or up to 75% guarantee, so that now we're sharing in the risk of that loan, and we're hopefully enticing your financial institution to provide you with this $1 million facility, because again, now they're not necessarily exposed to the whole $1 million loss. It would be EDC that would onboard 75% of that risk. In certain instances, if you are looking to finance assets outside of Canada, there is a path forward for us to provide guarantees of up to 100% as well. And so as a Canadian company, you're able to essentially get your loan, you're able to diversify your market, and you're able to manage your risk. And so that's just an example of how we can step in and help.
That's excellent. EDC working with the banks, sharing risks so that you can export more.